Hey everyone, welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And though I'm on vacation, I thought that let's pick up the camera and try to clarify this dust from this worrisome topic which has been pondering upon the minds of many retail investors since few weeks, even months, since last year. And I've been reading a lot of messages from my own Patreons group, but also from other investment groups from WhatsApp, Telegram, Facebook as well. And this particular topic has created a lot of panic in many retail investors, specifically those investors who have just started their investment journey since last 2 to 3 years, and they haven't seen this type of decline and in the stock market, but specifically for the Chinese stocks. Yes, today's topic is about why the Chinese stocks are falling. I mean, they have been getting hammered on day-to-day basis. Either the stocks are on all-time lows or at least 5 to 6 year lows. So that would be the today's topic, why the Chinese stocks are falling. Now, behind this fall, there's one big reason which is creating a lot of fear in the minds of all retail investors. And this, I have been hearing this since 3 years already, and this reason has been pondering upon many investors out there, and this is the delisting of Chinese stocks. So we will talk about this further in this video, and in the end of the video I will definitely tell you guys my personal opinion and what I'm doing with my portfolio considering the Chinese stocks. So let's get started. So there are few reasons behind the fall of the Chinese stocks. Now, one of the reasons is the slowing down of Chinese economy. Yes, the GDP growth reported in 2022 first quarter was around 4.1%, and if you look back from 2020, the GDP growth was around 8.1%. That's a decline of, guys, 4%, which is a heavy decline. Now, if you just look alone, the growth of 4.1%, if you don't try to compare it with 8.1%, then the growth, the GDP growth of 4 to 5% is good, guys. It's good. But this decline of 4% has created, let's say, a scenario and a mindset that the economy is slowing down. It is slowing down, of course, if you compare, of course, if it is slowing down. But if we just look at the growth itself for this year, it's not that bad, to be honest. But anyways, now the most important and the most basic reason for any economy to slow down is the consumer spending, the buying power. That's the basic of economics. In any part of the world, this is one of the most important reasons why that particular economy might be declining. Now, the reason could be anything. Rise in interest rates, salary cuts, which lets the consumer not to spend money in that particular country. Now, what that does is that it reduces the float in the economy. The money, the velocity of money is reduced. And that, of course, slows down the economy. To be honest, we need this in US. But anyways, we are talking about China. So now, why this is happening in China? One of the most impactful reasons is the real estate crisis in China. Like we saw Evergrande was a proof that China's growth model for real estate is not that sustainable. And this Evergrande is just one example. The whole real estate industry is in crisis, and Chinese government is fighting to keep afloat the industry, the sector. And this has affected the buying power for the consumers. The prices are going down, yes, but there is a fear in the country, and the fear has created and restricted the consumer to spend more money. Now, the other reason why the consumer spending has been reducing in China, this is the most recent reason, and that is the Omicron variant. That has created a fear once again in the Chinese people that the lockdown may occur. And actually, one city, Chenghe, which is one of the most biggest component automobile manufacturer, the plants are there in that city, has been locked down. And this is again creating a lot of fear in the people's mind that the economy will come to a pause. And that is another reason why the economy is struggling. And also the third reason is that the global economy demand for the Chinese goods have reduced drastically. And this again has created a lot of impact on the Chinese economy. Plus the Russia-China relationship, again, that was nothing regarding economy, but that created a negative catalyst for the stock market, even though China just mentioned that no, and they declared that there is nothing like that. They are not stepping into the war directly, but of course, since they have a common geopolitical enemy, which is the States, that created a lot of misunderstandings, and of course the news channels have to increase their TRPs, and the news just came out, which indirectly impacted the stock market for the Chinese stocks as well. So these are few reasons why the Chinese stocks are down. Now, coming on to the delisting, this is another big reason why the Chinese stocks are down. Now, I am honestly, guys, tired of hearing about this reason. I've been hearing this since years now, yeah. And recently, according to the new HFCAA rule from the SEC, they filtered out 5 Chinese businesses, which honestly I haven't heard about them, and they filtered out these Chinese companies and mentioned that they are given a grace period of 3 years, and of course they didn't abide according to the regulators from US, and they did not submit proper paperwork regarding their fundamentals. That is basically what SEC from US is demanding. Now, these are the main things to be taken care of, and these are the reasons why the Chinese stocks are getting hammered on day-to-day basis, and these are the reasons which have created a lot of fear in the minds of investors. Yeah, now my thoughts on this, what are my thoughts and what I'm doing? First of all, now I have already made a video on this, and I've clearly mentioned in that video that Shen Bing, the Director General of the Security Exchange Commission from China, came out publicly and gave the statement that they are working on the SEC paperwork demanded by the US SEC, and they are working on these things, and they don't want the investors to get panic, and they know that this will not just affect the global investors but also the investors from China and the companies from China. So the Chinese regulators from SEC of China are working on this, and they have clearly mentioned that they are working on this. Yeah, they will not come out every year, every month to just give out such statements. Yeah, so if they came out last year and they gave the statement, that is for sure that they are working on it, and that is why I personally am not worried. Apart from that, just to clarify this, I'm not invested in all of the Chinese stocks. Yeah, my investments are in big tech giants or the companies which are having a big market cap, because there's more probability that bigger the company is, the more transparent the paperwork could be. Not talking about penny stocks or the stocks which I don't know from China, like you saw in the screenshot, those 5 Chinese businesses. Honestly, I'm not aware about that. If someone is invested, I'm sorry, but I personally am not looking into each and every business from China. I'm invested just in Baba, but if somebody would ask me, I would say that Baba, Tencent, Baidu, JD.com, Nio, Xpeng, Lioto, these are the businesses which are quite huge. Yeah, they are also international, and especially when Nio is expanding internationally. So these businesses will have the most chance to submit their paperwork and be more transparent, because they are not just limited to China. Yeah, and this is where I draw the line. I'm not investing in much more companies from China, because in my opinion, these are the businesses which will definitely not get delisted. Now, on the other hand, I'm just a small investor. On the other hand, just look at Charlie Munger. Yeah, he has not sold any of his position. Ray Dalio, he trimmed down his emerging market portfolio, but he put all that money into Alibaba alone. This shows his confidence into Alibaba. Yeah, trimming down a position in the whole emerging market ETF. This also shows us that he also might be worried about the ETF emerging markets, because the biggest portion of the emerging markets is from China, and that means many small Chinese businesses are in that ETF as well. Yeah, so this shows that he's also not that confident about the full Chinese all industries, but the big giants. Yeah, and also Kevin O'Leary, he just opened up a position in Alibaba as well recently. So guys, big investors like them, if they are confident about Alibaba or other Chinese stocks, big Chinese stocks, then I'm sure that we are on a safer path. Yeah, I'm not asking you guys to follow them blindly in terms of valuation models. No. I'm saying that if they are not worried about delisting or other issues regarding China's economy and being bullish on Chinese companies, that means something, right? Of course. Anyways, so this is my personal opinion, and this is what I'm personally doing. I am not trimming down my positions on Alibaba. So just to declare, I have 3 stocks from China's market, that is Alibaba, JD.com and Nio. And I'm not trimming down my position. Am I buying? No, I'm not buying anymore because I don't want to increase my position more than 5% regarding these companies. So I'm about to reach 5%, but I will keep some money aside to see if I see more downfall. Then I might buy into these companies. But for now, I'm just sitting still, watching the news and not taking all the news. To be honest, I'm not stomaching everything because, to be honest, this creates a lot of unnecessary panic. This is what I'm invested in. This is my personal opinion. I'm not getting panicky at all, because my horizon of investment is 5 to 10 years. Yeah. And also many people I've heard saying that long term, I want to invest long term, 1 to 2 years. Guys, that's not long term. The definition, of course, varies from people to people, but trust me, this is not the definition of long term in any book out there, in any investment book if you have read. And if you haven't, then I urge you to read. 1 to 2 years is not long time. So guys, when I say that you should be investing in long term, especially in such market situations, when you're investing, your investment horizon should be long term. And again, by long term, I mean 5 to 10 years easily. And why I'm saying this? Because if you look into all the factors which are affecting the Chinese market right now, we can see that all these factors are temporary. For example, the real estate crisis. Look at the United States. The United States also eventually recovered from the real estate crisis, right? Especially such economies, the largest economy in the world, China, it will eventually definitely recover from the real estate crisis. And the consumer spendings will also recover as soon as the Omicron, the coronavirus situation is finished. I mean, not finished completely, but as soon as it is settled down, the economy reopens in China. As you can see, that the world is depending on China as well. It is one of the most important global players in terms of exporting stuff. So there are a lot of countries dependent on China as well, and that will eventually bring back the economy of China. And about delisting, like I mentioned, it is really, in my opinion, it is really difficult to kick out such big tech giants from the US list. I don't think so. And again, I'm not saying that all the Chinese companies are safe. No. I'm not saying that, because China also, on the other hand, have been in the talks for, with dirty paperwork and insufficient paperwork, but that has been limited to the small market caps. So I'm a huge fan of small market caps, but not from China for sure, but from the US, from India. I am a big fan of mid and small market caps, but from China I am not investing into those stocks. If I'm doing day trading, that's a different thing, but for investment purposes, no, not at all. And that's why I'm mentioning that not all companies are safe from China, but these companies for sure, in my opinion, are not going anywhere, to be honest. And in the worst case scenario, they will be trading on the Hong Kong Stock Exchange. Of course, that affects the liquidity and the valuation. Totally different valuation would be there, but still there is a chance that your money will not be gone. Okay, of course your broker needs to be trading Hong Kong Stock Exchange, but that's the worst case scenario, guys. I don't think that it's gonna happen. I don't think, in my opinion, that stocks or businesses like Alibaba, Nio Xpeng, Baidu will get kicked out from the New York Stock Exchange or the US Stock Exchange. So that's it, guys. That's all for today. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.